It's almost midnight here in New York City, and what better way to end a great Sunday and a great weekend than to publish another bear update for the Trade Devils Bitcoin Bull Bear series. If you're new or more recently started viewing our channel, my partner Sam and I alternate bull and bear counts once a week, and we tend to go more in depth in these updates than our daily updates, with the intent of informing our viewers and especially our members with credible counts on both sides. We think this is a great way to increase awareness of the possibilities, since trading is never certain, and it's also a good risk management exercise, as well as studying both counts sets up some very interesting trade opportunities that are high probability if you are careful to look for them. So in that spirit, I will present to you my latest bear thoughts. Before I do that, I wanted to reiterate my partner Sam's comments around how excited we are to have officially launched the Trade Devils belt system. It's patterned after the Brazilian Jiu-Jitsu martial art, which I'm quite partial to, having been trained in Brazilian Jiu-Jitsu for many years. But basically, we liked the jump and skill levels for each belt progression. It's only a 5-belt system. You start with white, then it's blue, then it's purple and brown, and ultimately black. And so the skill jump is very pronounced between each belt system. And that's kind of how we wanted to keep it and differentiate the various members' expertise. In my kind of layman's terms, by the time you're blue, you should be very comparable in skill to a level 1 certified Elliott Wave analyst. By the time you're purple, you will have integrated that expertise and substantially enhanced it, but integrated it with all the other forms of TA that we teach at Trade Devils, namely median line analysis, various forms of geometry and geometric analysis, Fibonacci and algo targeting, and of course all the trading skills associated with putting those TA skills to good use in the markets. And also, by the time you're purple, you should not be losing money anymore as a trader, even as a relatively frequent trader. So that's an important requirement and ultimately the best test of skills in my view. By the time you're brown, you should be able to make a good living just trading. And by the time you're black, not only are you a master of all the various forms of TA that we teach, but you're so good that you might even help us enhance it if our methodology evolves, and you'll be a core member of the platform. You'll be comped for life as far as membership is concerned, and you should be so good at the various forms of TA that you should be able to teach it too. So that's the goal, and we're very much looking forward to adding some black belts to enhance the expertise that Trade Devils, that we grandmasters and senseis have for our members. Anyway, wanted to get that out, and we're super excited. We've got a bunch of tests and a curriculum for each belt level, and so if you're interested, come join us and take a peek at what we offer there. All right, so on to the analysis for this week, or this day. Last week I left you with this possibility. I talked about the possibility of the W being this ABC zigzag, which that's the pattern that I'm most confident in, just because it's so much more probable as a count as a zigzag than just about anything else, from a statistics and from a wave shape and a guideline and from every perspective. So if that's true and it's a zigzag down, then what is everything to the right? And that's been kind of the dominant question for anybody who's seriously been analyzing the correction from an Elliott wave perspective since probably March of this year, when we, shortly after we put in this first low, and we got some questions answered as we put in this lower low here. So what to make of that? Well, one of the ways that fits into the higher degree picture, as I've charted here, is that the X wave is a flat pattern. Not technically an expanded flat, because as I said last week, the, 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 the B hasn't retraced the origin of the A, by enough. The guidelines are around 105%, and really it was almost a double bottom, so it's still technically a flat. But you can clearly see that the A being quite sharp is a three-wave pattern. I've got it on the 1 day just to accentuate the dominant wave shapes and kind of hide the noise a little bit. And then you've got what easily could be a 5-wave move down, could be a 3-wave move up, and then a 5-wave move down to put the B in, a zigzag. And it has to be a zigzag because, well, the rules say so. B's for flat corrections must be zigzags. And if you guys are referring to the old book, i.e. the Bible, Elliott Wave Principle, that is a rule set that's out of date. And I want to remind members that the way we test in our belt system and what we teach is the latest and greatest. We're in regular dialogue with the certification body and have the latest rules and guidelines. So that's one of them. And if you're a true believer in the theory, then, well, you've got to treat this as zigzag. And because it retraced below the level of the origin of the A, then really not a lot of patterns it could be. So one of them is this flat correction. And with the C length likely being between 100% and 127%, but closer to 127 because at 100%, given the slight negative retracement of the A, you have the 100% only would basically be a failure, and that's a low probability count. So the next likely move up is 1272, or around 130%, and that is, typically also the most likely length for a C for an expanded flat, which, although this technically by the definition isn't, it is slightly expanded since the B has retraced. So we thought that this could be a potentially probable count from a rules and guidelines perspective. Wouldn't surprise me at all. I've seen double zigzags with a flat X wave quite often. Flat or triangles tend to be, in my opinion, the most common connectors of two zigzags, even though I think that the guidelines suggest that the zigzag is, at least in crypto, I have not seen that to be the case. I've 3 zigzags strung together in a double zigzag. To me, I really can't remember that many times I've seen that, even in the lower time frame. So something like this wouldn't be at all surprising. The issue I have with this count now, given that we've had a week of data and this big dump since then, is simply that I just don't see the volume in some of the indicators as far as, at least the ones I use, Elliott Wave Oscillator, RSI, MACD, the stochastic, and this momentum indicator called ADX, which is something I borrowed from my options trading. But and even the Vegas waves on the 1 day, which is pretty, it's you typically use them 1 hour plus in terms of time frame, and 1 day is a lot more, but than 1 hour. But it's notable to me that there's a little bit of a death cross going here. As you can see, my Vegas waves are colored so that the lowest time frame, the 144, is orange, EMA. The 169 EMA is blue, and then the 233 is red. So whenever a shorter moving average crosses a longer term moving average, it's a bearish sign. And for the first time, it crossed sometime in July, and if you were to zoom in here, you could see that they've remained crossed for some time. And that's not, that's not what I'd want to see if I'm counting on an impulse that's going to take Bitcoin from 6.9K or wherever we're at to something in the low teens, certainly over 10K. So is this count alive? Absolutely, it's alive. So is the bull count that Sam talked about. It ended a double zigzag here, and we're now on the one of the cyclical one of the cycle 2. It is alive technically, but just I'm not seeing it from a indicator, moving averages, and volume perspective. I still see just about on just about on every exchange except for BitMEX, a very significant decline in volume. And I showed last week in the aggregated volume that was available on the website CoinMarketCap, which aggregates all the exchange volume available. You'll see a market decline in volume. So that's very atypical of a correction ended, and very typical of a triangle pattern. So that's one of the counts I wanted to cover in this video. I left you with this flat. I still think that's possible, but given this deep retracement, I think the way you're forced to count it now is as a 1-2 if you're thinking this is impulsive upwards or motive upwards. And it's possible also that it's even more bullish and it's 1-2, 1-2. But again, given the lack of volume and the indicators not showing significant bullish divergence, I'm not buying that one. So I think this is probably a 1-2 if it's impulsive. But the question is it even impulsive given this little death cross that's been maintained in the Vegas waves? You can also see something similar in a more traditional, at least the 20, 50, 200, which is the 20 is the bright green, the 50 20 EMA, 50 EMA is the yellow, and then the 200 SMA I've got as the orange. Let me hide the Vegas waves. And you can see that this one's it's quite bearish too. Although this, for these moving averages, the cross happened way earlier and has been maintained despite this pump up. So the moving averages indicate to me we're still in bear land. Before we do a count, what else can we look at to give us some clues as to what might be going on? Well, as a huge fan of geometry, I like looking at anything, whether it's a Fibonacci geometrical relationship or Gann square or Gann fan type of analysis. And in isolation, I wouldn't necessarily trade any insights from any individual one of those pieces of analysis, but in combination with everything, you might gain more conviction as to one way or the other. And to me, they support a bear case more than a bull case. So I've got the Gann square fixed tool here. Let's anchor it off of the first major low, this one. Let's get it right down to the tick. So let me zoom in here. I don't know what just happened here. Okay, so let's move this down right at the 20K high, as you can see. And this 45-degree angle, this is the Gann square fixed, so I don't have to calibrate it. It is literally 45 fixed the whole time, no matter what you do to the X and Y axis. Lands, looks like I've nailed it, landing right on the low. Missed it by a hair. Let's see. Anyway, close enough. I mean, it's either here or here, and it's hard to tell because recall that on different exchanges it was either here or here. So I think geometrically you would agree with me. This is very significant, right? I mean, it's hugging this 45-degree line the whole way down here. So when I move it slightly to the right or left, same thing. And now let's put the arc somewhere. So that, yeah, I anchored this arc on this first major low, swing low here. And you can see the significance of that arc here as it contains this first component of what I think will be at least a three-part correction at WXY at a minimum, if not WXY XZ somewhere down the line. And then, after the wave breaks free of this arc, then it goes to the next one here, the next major Gann arc, and hugs this line and just broke it and found support at the corresponding one after this one. I mean, I can't, I don't believe in coincidences coincidences in the market, but the geometry here just seems, incredibly compelling. And by the way, I didn't plan it this way, but it just so ends up this way, that this projection for a flat corrective pattern looks like it aligns quite well with these Gann fans. The idea being that once you start moving upwards between the 45 degree to the next fan upwards, that you're likely to meet it. There's almost like a magnet effect. So I wouldn't be surprised at all if this moves up here to put the 3 in, vacillates on here, goes down for the 4, and then pumps up for the 5, but meets resistance at the next Gann fan level, and then it's down for the Y, right? So the geometry is interesting, and almost coincidence that I label it this way, and it falls so neatly here, but you can't ignore this geometry. It is obviously visually quite compelling. Okay, another tool I use is various types of Fibonacci analysis tools that have time factor in them. So a typical Fibonacci retracement obviously is really all about the y-axis. It's all about price, and whether you are consuming a lot of time or little time, it doesn't care. It's really just projecting once it hits a certain level, where are the different y-axis Fibonacci resistance and support levels, right? But that's not the only way to use Fibonacci. Obviously, I've shown some analysis that I've done with arcs before, and today I'm going to do a little bit of Fibonacci channel analysis. So let me just hide this Gann square, because it does tend to clutter up the chart quite a bit. So channeling this move from here to here and anchoring it at the high, which you'll see there's a line that pretty much a trend line that connects all these, give or take. So channeling from here to here, the low points, and then extending it to, let's call it this pivot right here, for the high to channel all this move down. You can see that from a geometry standpoint, and again, this has nothing to do with Elliott counts. You can get a wave and a third, or a wave and a half, or 2 waves, or whatever. You're looking for swings. So swing from here to here, and geometry associated with that. Clearly this one undeniably is. So I've anchored it off of this swinging high. Let's get it to the tick right there. And you can see the 1618 of that channel was a very good predictor for what might happen after it got hit. It hugged the line all the way down to put the new low in. And now we're going back up, and we've got the 2618 looming here. Now, if history is a guide, the 1618 acted as massive resistance, both in terms of the y-axis, but also as time transpired, the x-axis as well. The point of these channels is that they're not fixed in time to a particular y-axis point, but they move downwards with time. And it looks like this might butt into the 2618 and face a similar fate. Obviously, the 100%. This channel can be pulled up here, and you'd be amazed at how well it channels all of the major pivots upwards, acting as massive resistance. But even this move down here, and this channel between here and here, containing most of this move down here, you can see the geometry makes you think twice about this count going all the way up here impulsively. So the count I wanted to cover today was a count in which, what if both the Gann square that I hid, where's this thing? There we go. So this one, where it's finding some support here and then it broke through, okay, and if it doesn't bounce up from here to make it all the way to this fan line, and it breaks down, which
I mean, if I'm looking at this thing without the Elliott count, that's probably what I would predict, given that it made it all the way down here and found some resistance. But there's no real bullish indication that it's going to bounce bounce very strongly upwards to make it to a new high. I could see it going up to maybe about 50 or 618 of this retracement, and then falling back down as it did here. And then, of course, it's running into this resistance from the 2618 of this Fibonacci channel. What happens if it doesn't make it up here? What Elliott count would support that? And that's the topic for today. So let me take all this out, or let me hide it actually, just in case I want to refer to it again. Well, the count that would support that would be a triangle. And just given the declining volume, it's undeniably a very strong possibility from a probability standpoint and from a wave shape standpoint. So let's cover that. Take this out, take this out. Now, if it's a triangle, there's not that many possibilities for what it could be. Obviously, given that this is a new low, it's got to be either a contracting running triangle where the A gets put in short relative to the B that puts in the price extreme of the triangle, and then it's up for the C, D, E, and then down, or it's some kind of expanding triangle, which is much rarer, but possible, where you've got the A here, complex B, putting in a new low, a C that would put in a new high, a D that would put in yet again a new low, and then an E that could not fail, would have to put in a new high. Expanding triangles can't fail. They can't, you can't have the E wave fail or fall short of the C wave. So again, for the reason that it's hard to see the impulsive force from a technical perspective that's going to propel this all the way up here, I'm discounting that as a likely count, although you got to just keep it in your back pocket in case it does move up. Then you got to consider that as a possibility. But for now, really, by far the more likely count would be that this is an A, a B, some kind of C either in or in progress, D down, and then E up, and then back down. It's almost impossible, I don't want to say almost, it is literally impossible to be able to predict the path of 3 waves out for a triangle, because there's so many different ways that it could go. But there are some clues that the guidelines give us and the rules. So one of the rules, obviously, is that you cannot only have one complex wave. And complexity is defined as one of two things, or both things combined. A very long wave, either the A, B, C, D, or E being much longer than the rest of the waves. Well, if this is an A and this is the B, I can guarantee you the B is the complex wave, just on length alone. The other definition of complexity is in terms of wave pattern. You can only have one non-zigzag pattern. You can have a triangle within a triangle, or you can have a double or triple zigzag combination as one of, but only one of the 5 legs of a triangle. So given that in a contracting triangle, or even in an expanding triangle, this has to be the complex wave. I can't imagine it wouldn't be, given how much longer it took than this. Well, what we know about the remaining waves is that they all must be simple zigzags, ABC patterns, just like this one, ABC. This could potentially be an ABC, ABC, okay? But if it's not, then this is an impulse up, 1, 2, 3, really short 4 and a 5. I don't love that, because this move here channels so damn well as a single piece of geometry that it's just hard for me to say that in an impulse where this is the 1 and the 2, the 3, 4, and 5 all are here. But just given the depth of this retracement, I'm begrudgingly going to have to say that that's possible and even likely. So if this would be a 5-wave move up, this would be a really jacked up zigzag down, because the Y leg of a double zigzag or the C leg of a single zigzag would be so much longer, over 200% that of the A or W wave, atypical. But quite honestly, if this is an ABC upwards, this was atypical too. This was very atypical. You'd have to call this the A, then a triangle B, and an impulse up much longer than this A, or A, some kind of jacked up B here with a short C. So we've seen these kinds of moves all over the place throughout this corrective structure, and so it wouldn't be too surprising for this to be an A, a B, and a C up. Okay. Now both measure reasonably okay. And I'll explain that in a second. But before I do that, let's pull back up the Gann square and the Fibonacci channel I drew. And again, I'm not saying that these things are the best predictors of where price might go, but we're looking for confluence here when we're making choices. And the choice here in this count where we have a triangle is this an ABC, and therefore the C wave is in. It's a short C, which would make this probably the D in, or damn close, and then an even shorter E, and then we're going down hard, so worth paying attention to that. Or that this is an A, B, and then a C further up. Now, Gann allows for this being an A and a B and a C up, because all the way up to here, before you face this resistance from this fan line, all good as a C. Remember, this is the A. It's a running triangle, so it got put in short. The peak was $11,750 on Bitfinex, give or take. This is the B at 5.8K. So the C could go from 5.8K to anywhere south of 11.7K or so. Now the closer it gets to that, the more it looks like a barrier triangle, one of these what was previously called an ascending triangle before that name got deprecated from the lexicon. But you know, it would be A, B, and then let's see if this is an A and a B, and E is about to end here, then what the C would look like if it's a one-to-one extension. So that would be I haven't zoomed in. I'm still on the 1 day, so this is slightly imprecise, but we're trying to get an idea only. So if we've got one more leg down, maybe to this support level here, okay, 100% would get you right to between 1 to 1272. Will get you right to this fan line. Okay, so very credible that this could be an A, B, and a C up for the C of a triangle that is a running contracting triangle where this is the A, this is the B, and the C would end here or here. But what does the channel tell us? This Fibonacci channel that's been such a good guide so far for the corrective sequence so far. And if this is all one piece of geometry, well, it's pretty likely that if this 1618 acted as so much resistance for this move up here that it was pretty much a price guide for the entire wave, then could the 2618 act in similar fashion? Very possible. It could be resistance. So let's take this out. If this is going to have trouble breaking through this 2618 straight line and not make it to this Gann fan line, well, the only other option we've got is that this is an A, B, and a C in with a D coming in or in. Now the D being in would be supported by this arc from the Gann squared fixed, which makes it quite interesting because then the E could potentially go up in short fashion, butt up against this 2618 of the fib channel, maybe even peek out briefly to get put in, and then you come crushing down for a brutal Y. So this Y would be here, and the X would be somewhere around here. It's a possibility. You can't ignore that. I mean, the Y would probably be out here because, as I said last week, one of the consistent behaviors of price is that whatever doesn't get put in price gets put in time. So given that we can't literally replicate a one-to-one extension of this where we go into negative territory, it's likely to be between 382 to 50% to 618 of this height, this Y, relative to wherever the X ends, but it'll likely take a lot longer. So it'll be a much more sideways looking zigzag, kind of like this one. You know, is what I would expect to end the correction. So anyway, both possibilities are there. that this is a, okay, now I'm just going to take these out because I think I'm done using these geometric guides. So now we've got the possibility that, start labeling this. This is an A, whoops. This is an A, B, a C in, a D either in or almost in, and then an E that can't go past the C. So it's got to be below 8 point, whatever the high was, 8,600 or 500, whatever it was. E, and then come crashing down, right? That would make for a pretty short C, D, and E wave. But as I was looking for precedents within Bitcoin history, I actually took another look at the 2014 correction, and I'm going to end the video by kind of counting that as one possibility of how to explain that one. And you'll see that one possibility is that it's a double zigzag with a X triangle that looks a lot like this one. So before we do that, let's talk about the other possibility, that the C is going to be somewhere around here, right? Well, a one-to-one extension of this off of, again, it's a little imprecise because this move down here is not complete, but let's call it complete at this support level or thereabouts. Then 100% would get you to this price level. So now that we've got a projection for a C, let's measure what the D would look like. Because normally when you're looking to measure a triangle and establish some boundary lines to measure thrust and things like that, you need to have an anchor point at a price low and a price high. But in a running triangle, you don't have that, because the anchor point for the price low is not the beginning of the A. It's the end of the B. So if I were to try to measure what the C from here to here was relative to the A, that's not a correct measurement for a running triangle. Again, because the A is necessarily short by definition. So what you'd want to do is you'd want to measure the height of the BD trend line, vertical line, all the way up to the end of the A. But we don't have a BD trend line because D is not in. So I'm going to show you kind of how I do this when I'm trying to measure these triangles in progress as possibilities. But the way I do it is I just back into it. So the only measurement you can take is the D relative to the B, right? So we've projected the C here. 100% is a very highly confident measurement. The B, from the end of the A to the end of the B, should have some kind of Fibonacci relationship to the D, which is this move here, right? Obviously, this is a little falsely precise because the C is not even in, but we're just trying to see whether the shape would make some sense. Well, you go from here to here, and you anchor it off of here, the end of the C, and you're looking for some fib relationship. Would be ideal. 236, 38, 236 would be quite rare, but I'm going to stick it in there just for shits and giggles. 382, 50%, 618. Well, the 618 would be right on where the B ended, as you can see here. And that is certainly possible, because that would mean that this is a barrier triangle that we're looking at, or something along the 618. That's a barrier triangle that we're looking at. And if it's a barrier triangle, it must break down, and if it's an X triangle, it will break down. So that's very possible. 50% is also, not out of the question, although that's not technically a fib number. 382, certainly a possibility. So you could be looking at something like this. 382, or I think more likely something closer to 618, something like this, where the C gets put in here, then you've got a zigzag D, probably more like here to consume more time, and then E here. Other than the highly time extended wave, the legs of the The other legs of the triangle tend to be generally equal in price or in time. So, by the way, if that's true, look at how short this A was, right? So that gives you a clue as to whether you're deciding between this being the C in or the C just in progress. Well, let's measure it. From here to here being only 16 bars, the guideline where the legs are generally equal in time with the exception of the extended one would suggest that this one at around 25 bars is much more likely than this one at probably double that, 54 or 50 bars or whatever it is, right? So that's another, aside from the fib channel resistance that we found here, this is another point of guideline confluence with Elliott wave theory, that this might be the CN. But we're measuring this one first because I want to save that last one for last. So if this is the C coming in, then the D could be anywhere in this range, to be frank. Anywhere in this range, it wouldn't be surprising. But from a statistical standpoint, a probability standpoint, it's more likely to be closer to the 618 than the 382, or even the 50%. So now we have an A, a B, a C, and a D. Well, we have enough to draw a trend line. So if BD looks something like this, and now we're really getting into projections that aren't necessarily precise. But again, this is in some ways just to consider which of the possibilities would make more sense. Acknowledging that this is falsely precise, if it looks something like this, then the A to the BD trend line in a vertical line, hold on, I did it backwards, because I'm looking to measure the C, if there's a fib relationship there. So from here, BD trend line to the top of the A, to the bottom of the B, I really need to make this a different color. Let's make it just blue so you can see it. I'm going to just move it temporarily. So what do you know? The C ending around here, around the 100% extension of this, would be damn close to the 618. A very probable wave ratio for triangles. Very probable. The most probable. So that's, a strong piece of data that suggests that this C might end here. And if that's the case, and the D is somewhere down here to put in something close to a barrier triangle, well, measuring the E, which would have to come in around here on this boundary line, it could overshoot it. It just can't cross this level. Can't go past the C. But then measuring the C off of the D, 618 would be right here on the boundary line. So this is potentially a roadmap for what a triangle X could look like. And again, I'm acknowledging this is falsely precise because you can't be precise. But if the guidelines and measurements are correct that I've done, and you believe in the theory, well, this is a lot what it could look like. Be looking at November, December or so, thereabouts, before you get a final dump down to have a pretty unhappy Christmas and an unhappy New Year. Okay, now, in this scenario where the C is in, now this is not going to be as falsely precise because now we're looking at a wave that potentially could be in. If this is what we're looking at, then what do we got here? Well, assuming that this finds some support again at around this support level, prior resistance, which is this line here, this dotted line, acts as support here. So assuming that this is a C in, and the D ends here, right? We would have a BD trend that looks much steeper, something like this. Which would make the E have to be very, very short, right? And then what are you looking at in terms of fib relationships? Well, let's measure the B and the D. The B off the C. The D would be, a little north of 236, which not the most probable count, but let's see what the A and the C would be like. Not count, I meant measurement. So B trend line, top of the A, off the B. Well, the C itself too is about 236. And then B to the C off this D. The E2 would have to be, between 236 to 382. So as funky a triangle as this is, you might actually have waves that are related by a common Fibonacci number, something around 236, and then you could have the final leg down. So those are two triangle possibilities. Now, I want to go back to 2014 to illustrate that this is not crazy to think this way. And again, I'm trying to provide you some credible bull counts that are both guidelines and rules compliant. And it's up to you what you want to do with these counts. This is really just a free public service, so to speak. As far as which counts I personally believe in and put more weight on, and how I would manage my trading plan around the various possibilities, well, that's really the topic of the member video and kind of live trades that we run now almost on a daily basis. But from a TA perspective and an Elliott perspective, this would be by far the two most probable triangle counts that have a triangle in the X position that I can come up with. All right, so here you have 2014 correction. I mean, it's eerily similar to 2018. I'm sure like hundreds of people have said that, and I'm not even saying that this is a fractal of what we're seeing. That analysis has been done a million times, and I'm not necessarily even a believer that that's the case, but the similarities are definitely there. It's from a wave shape perspective, from a timeline perspective. This thing peaked in December of 2013, and 20K was a peak that was achieved in December 2017. Then you had this precipitous fall in the first quarter of 2014. Same thing for the correction we're going through now, and although the peaks and valleys are a little bit different, you can argue that the wave shapes have a lot of commonalities. So anyway, that's not why we're looking at 2014. The reason why we're looking at 2014 is, how would you count this? Well, one of the ways in which I would count it is as a double zigzag with an X triangle. And if the triangle isn't obvious to you, it wasn't to me either as I was counting this. I had this initially as a zigzag, very similar to the one that we have now. And then this is an X wave, very similar to the way that a lot of people are claiming that little move from 5.9K to 11 or 12 or 13K was. And then this as a very ugly A, B, C zigzag. But I didn't like that for multiple reasons, not the least of which is I just didn't like the geometry of it. As you guys know by now, for me, geometry is almost as important, if not more important, than just about anything in TA. And putting the GAN chart here for nothing more than the geometry of it. So I do this a lot where I go from swing high to significant lows around here. I put the 45-degree line right there, connecting the 2 points, and I try to identify geometries that make sense. I'll move to this pivot here, although that would be my first choice. Neither would this one. Just not significant enough in the context of this our completed correction. I'd probably choose this one. This one seems pretty good, right? You can see these arcs being very significant throughout the corrective sequence. So maybe even here. This one's not as good as a predictor. This one, not as good either. I like this one. It's the first sharp move down. And when you look at this as a geometric guide, the slope of this from here to here, whether it's one wave, 2 waves, 3 waves, part of this wave, you can count it many different ways, but to me the cleanest counts are the ones that are geometrically congruous. And so I would be very tempted to count all of this bounded by the 45-degree line as either one or part of one wave. This to me, between these 2 fan lines, looks like part of one wave, and then this, everything in the middle, is something else. And so that's how kind of I started analyzing it geometrically. And one count that supports that would be that this is a zigzag. Now it's complex. Maybe it's got a diagonal here, or maybe it's some ugly double zigzag, and all of this is a triple zigzag. Hard to know because I can't really zoom in below the 4 hour. The price record on TradingView doesn't allow for that. So I guess in some ways we'll never know. But this to me looks like some kind of A, B, C, potentially a zigzag. But this is the wave that I wanted to kind of point your attention to, which is this to me is very possibly a triangle, which is ABCA, ABCB, ABCC, A, B, C, D, and a short little E here. And then you've got, very credibly, a zigzag. 1, 2, 3, 4, 5, A, B, C, B. And then you've got 1, 2, 3, 4, 5, 3, little triangle here. 4 and 5, right? So for the C, so something like this. Where you've got the height of this first third of the correction from here to here off of this E right here, and you get the last third of the correction, this last potential zigzag, not quite 618 but over 50%, which is a pretty probable, 618 is a pretty probable measurement in a double zigzag combo, or even just a single zigzag. If the C is not equal to 100%, which for Bitcoin it couldn't, because again it would take you to negative territory, the next most likely is 618 or around there. And that's what we get. And this triangle that's got potential triangle, it's got this volume declining, and then you got this, then you got this thrust on volume relative to this. It's a lot of volume to start the next leg of the corrective sequence. Right? So I've got something like an A, B, C here, triangle X, and then an A, B, C to end it. Right? And again, I'm not making the point that this is a fractal of what we're seeing here in 2018. That's not what my point. My point is these funky triangles with wave ratios that are non-standard, they do happen. Let's measure this one. So zoom in a little bit to do this one, and let me just get rid of all this other geometry and such. So from A to the BD trend line, which would be here, I drew this triangle wrong. Let me draw it, redraw it. So if this is the B and this is the D, the right way to tag this or to draw it would be like this. I know it looks ugly, but that's the convention. BD trend line, AC trend line. This would be AC, right? And this is the E. So A, B, C, clearly the complex wave given how much time it took, although it looks like a pretty standard zigzag to me from a shape perspective. Then you got A, triangle B, C, long C relative to the A, but it happens. We're seeing it a lot in Bitcoin circa 2018. Then a very standard C, A, B, C, very clear. And then a D, A, potentially another triangle B, C down. And then you've got this little A, B, C, E here to kick off 1, 2, 3, 4, 5. A, B, and then the C for the zigzag Y. Right? So the C relative to the A is somewhere between closer to 236 and 382, and then the E relative to the C is almost exactly 382. And then the B, let me just get rid of this. The B is related to the D by a much more standard 618. Right? So these ratios where you've got way below the 50% or 618, something closer to 382, 236, you can't discount a triangle just because that's the ratio you're getting. I mean, I'm sure there's a lot of guys who are laughing at this saying, how can you count it this way? Well, I'm telling you, from a technical rules compliance and guidelines compliance perspective, this is not a crazy count to have this as a triangle X and a zigzag here, zigzag here. I'd love to hear your count, but my point is whether this is correct or not, whether this is the correct count or not, it does explain this correction in a way that's rules and guidelines compliant. And so, back to kind of where we are now in 2018, whether this is a triangle or not, if it is able to explain the correction by the time it gets put in the same way that I just explained 2014 in one way to support this case, then what does it matter, right? You put 10 Ellioticians in a room and they're all perfectly competent, and you give them the same exact chart, there's very few guys who are going to have the exact same count, right? So it's a question of how consistent are you with the rules, how consistent are you with the guidelines, and are you coming up with technically valid counts? That's really what's important, not exactly how you end up with your count. And for me, this is certainly a possibility, guys. You can't ignore that this is what's going on. The other kind of interesting thing I'll note is that makes me suspect that the top here is that if you measure the retracements from here to here, it's a little over 65% for this one of this, and then once again from here to here, it's a little over 65%. It's almost the exact same ratio retracement level. Two lower highs in a row. I mean, if you look at it in the most simplistic way, you've got a high and a low, a lower high and a lower low, a lower high and a lower low, a lower high and a higher low. So there's some hope there that there's an end to the correction, but then there's a lower high and another lower low, and then a lower high and potentially a higher low here. So whenever you got lower highs, lower highs, lower highs, lower highs, lower highs, and then all of a sudden you start getting higher lows, that screams triangle to me. So is this my preferred count? No, it's not. But I left you with one that made some sense technically last week. Here's another two. where this is the triangle we're seeing, or the C has yet to be put in, somewhere around here. And if that's the case, I would expect the D to come down to be closer to a barrier triangle, something like this, and the E to fall somewhere around here later in the year. But one important thing to look for is you want to see some, it doesn't have to be identical, but you know, the wave time sequences for the C, the D, and the E are going to be relatively close. And the A is probably the shortest because of the sharpest, but it's not going to be triple or quadrupled out of the A. You know, given that this is the complex B, I would expect the C, the D, and the E to get put in way faster. Wouldn't surprise me at all if the combined time sequence of the C, the D, and the E equated to that of the entire B or something like that. Anyway, those are my latest thoughts. Hopefully you learned something from this, and I'll catch up with you guys next week.